Trillion dollars, 0 cents in market value, gone, just days after Trump issued bold new trade demands. And now, Canada and Europe have slammed the door shut, rejecting the terms outright and canceling one of the biggest aerospace deals of the decade. The $43 billion 0 cents Boeing agreement? Dead. Investor confidence? Shattered. Trump's aggressive push to renegotiate trade terms with key allies backfired almost instantly, triggering massive sell-offs, supply chain shocks, and a brutal hit to U.S. global credibility. What was meant to be a power move has instead become a historic collapse of trust and capital. And, behind the scenes, global powers are beginning to wonder, is America still a trade partner or just a threat to stability? This conflict didn't erupt overnight. It's been building for months. As Trump ramped up his campaign trail promises, he revived his hardline stance on trade, demanding fairer terms from U.S. allies and threatening tariffs on everything from steel to software. His team reportedly delivered a blunt message to leaders in Canada and the European Union: renegotiate now or face heavy economic consequences under a second Trump administration. As Trump responded with his famed comment, he appropriately responded under a second Trump administration. But instead of folding, America's oldest allies pushed back. Hard. Behind closed doors, officials in Ottawa and Brussels grew increasingly frustrated with what they saw as bullying tactics and unpredictable demands. And when Trump's team tried to force revisions to a nearly finalized $43 billion 0 cents Boeing deal, intended to secure aerospace contracts with European and Canadian buyers, negotiations collapsed. What followed was immediate and devastating. Boeing shares plunged, dragging markets with them. Foreign investors pulled out. Global financial indexes bled value. Trump's approach, once praised by some as tough negotiating, now looked reckless. And for Canada and Europe, it marked a turning point, a decision to step away from U.S.-led deals and instead build alliances that didn't rely on Washington's mood swings. Now the question is, how much more is America about to lose? The canceled Boeing deal wasn't just another contract. It was a cornerstone of U.S. aerospace trade, valued at $43 billion, 0 cents, and years in the making. The agreement would have seen Canada and multiple EU countries purchase next-generation aircraft from Boeing, supporting thousands of American manufacturing jobs and stabilizing a company still recovering from recent setbacks. But in the final stretch, Trump's team demanded last-minute changes, revised pricing, technology restrictions, and guarantees that favored U.S. supply chains exclusively. To Canada and the EU, these demands crossed a line. Sources inside the European Commission say officials saw it as an attempt to strong-arm allies in the middle of sensitive negotiations. Ottawa reportedly viewed it as a violation of fair practice, especially after months of good-faith discussions. And so, the deal died. Publicly and definitively. The fallout was immediate. Boeing's stock fell over 12% in 2 days, erasing tens of billions in market value. Suppliers braced for cuts. Workers feared layoffs. More importantly, the collapse signaled something deeper. The world is no longer afraid to walk away from U.S. deals. And Boeing, once a symbol of American industrial dominance, has now become a casualty of political pressure and diplomatic overreach. For decades, Canada and the European Union were among America's most reliable trade allies, willing to compromise, negotiate, and support U.S. leadership on the global stage. But this time, they made it clear. Enough. In a rare joint statement, European and Canadian trade officials publicly rejected the demands coming from Trump's inner circle, calling them unrealistic, one-sided, and damaging to global economic trust. Privately, diplomats were even more direct. One EU official told Reuters, "You can't run international trade like a hostage negotiation. We don't bend to ultimatums." Canada echoed that tone, with leaders in Ottawa confirming they've already begun redirecting major supply chain deals toward European, Japanese, and domestic partners, cutting the U.S. out entirely for certain defense and aerospace contracts. Even France and Germany, normally measured in tone, backed the rejection, signaling a new willingness to act without U.S. involvement. This wasn't just a refusal. It was a coordinated stand against U.S. unpredictability. For Washington, it's a wake-up call. Allies who once followed its lead are now asserting their independence and building trade networks that won't be held hostage by shifting political winds. And for Trump, the rejection is more than symbolic. It's financially devastating. The market didn't wait to react. $2 trillion, 0 cents in global value vanished in less than 72 hours. After the Boeing deal collapsed and Trump's aggressive trade stance made headlines, Wall Street tumbled. The S&P 500 dropped nearly 5%. Tech and aerospace stocks were hammered, and foreign investors began offloading U.S. assets at an alarming rate. European markets also took a hit, but far less severe, signaling that investors saw the U.S. as the source of instability. Meanwhile, the dollar slipped as safe haven flows moved to gold, the euro, and even digital currencies. Credit rating agencies issued early warnings citing rising geopolitical volatility tied to trade hostilities. And behind the scenes, multinational corporations hit the brakes, suspending deals, freezing expansion plans, and lobbying Congress to calm the situation. This wasn't just political noise. It was a real, measurable economic shock. And if things don't cool off soon, the damage could get worse. What Trump framed as tough trade talk has now backfired spectacularly. Instead of securing better deals, his demands pushed longtime allies away, killing major contracts, damaging markets, and isolating U.S. leadership on the global stage. Rather than forcing Canada and Europe to bend, he exposed how ready they were to walk. Even American businesses are now pressuring the White House to reverse course, warning that continued aggression could cripple exports and shatter investor confidence. Trump's approach wasn't seen as strength, it was seen as instability. And this time, the world didn't blink. It walked. In the eyes of the world, the blame isn't falling on just one leader, it's falling on America as a system. While Trump sparked the current tension, many global leaders point to Washington's overall unpredictability, from Trump-era tariffs to Biden's shifting foreign policy. Canada and Europe no longer trust that deals made today will survive tomorrow's U.S. politics. Business leaders in Brussels and Ottawa are now asking, what's the point of negotiating if the next president just tears it up? Whether it's Trump or Biden, one thing is clear. Global confidence in U.S. trade leadership is breaking. End of. This week may mark a turning point in global trade history. For decades, the U.S. set the rules, led the deals, and held the trust of its allies. But now, with a $43, 0 cents B deal dead and $2 trillion, 0 cents in value wiped out, even the most loyal partners are charting their own course. The world isn't waiting for America to lead anymore. It's moving on together. And unless Washington regains credibility and stability, it risks something far worse than tariffs or market dips. It risks losing its role as the center of global commerce. For good.